Thank you once more and welcome again to this particular video. And on this particular video, I'll be speaking something close to what I had said in the earlier video on the political economy. But now I'll be speaking about taxes and your money and wealth. Ideally, if you belong to any particular country and you're a citizen of any country, the government expects you to pay taxes as part of your civic duty. And this is the greatest duty of any citizen of any country, to pay their taxes to the government and to the state. But ideally, nobody wakes up to go and pay taxes for the government. We don't wake up to work hard. We don't go to our workplace every morning because we want to pay taxes. So taxes become a necessary evil for you to be able to earn your wealth and money. And the moment you start making money and wealth, and your wealth start growing, taxes become a major cost consideration or a major factor that you need to take into account as you make your money or as you grow your wealth. And the reason why I speak about taxes is that the nature of the tax laws in any country, they are designed in a way that the taxpayer can reduce what we normally call the tax burden. And there are certain loopholes that are deliberately provided in law that the taxpayers can be able to use to be able to reduce their tax burden or the amount of tax that they pay to the government. Ideally, there are two issues around taxation. There is something that we call tax avoidance, and there is something that we call tax evasion. Now, tax avoidance is legal, or it's permissible or permitted in law, in the sense that you can arrange your incomes in a way that you reduce the tax that you pay to the government. But on the other side, what we call tax evasion is when now you illegally or you fail to pay taxes that you expected to pay to the government. So you need to understand the difference between tax avoidance and tax evasion. Tax evasion is illegal. And if you are in the business of looking for money and wealth, you do not really want to engage in tax evasion, because the moment the government catches up with you, the taxes and the penalties are quite high and quite expensive. We have seen companies that have been able to be forced to close because of penalties and fines related to taxes. And I think some good cases in Kenya, we have been having the Karaoke breweries. We've seen how much money they have spent through lawyers fighting for various taxes. But what you talk about tax avoidance, and what I'm speaking about in this particular video, is to educate you about using the available loopholes in law to reduce the amount of tax that you are able to pay to government. Now, if you look at the different tax laws that we have in the country, we have the income tax, we have the VAT, we have the excise tax, we have also other laws that deal with the procedures of payment of taxes and all that. Now, all these taxes, they focus on different classes of income. For example, income tax focuses on the money that employees generate from their salaries, the money that businesses make from their companies, which call the corporate taxes and all that. So there's a way you can arrange your income in a way that you reduce the amount of taxes that you're able to pay to the government. So as you look at your investments and as you create your assets, you need to ask yourself, what are the taxes that are associated with this particular asset that I have created, and how does that tax compare with another class of tax in another asset? For example, let me speak about a good example of the government tax bills and bonds. In an earlier a presentation, I talked about creating assets. So you look at the government treasury bills and bonds, and if you're investing or creating these particular assets, the amount of taxes in that class of income or the interest that government pays you is relatively less compared to what you pay in payee. If, for example, you are earning a lot of money. For example, in payee, the moment you are earning 43,000 and above, you are already paying 30% of any income that you get on top of that to the government. But if you look at the treasury bills and bonds, if you buy a bill or a bond which is 10 years and below, or less than 10 years, the withholding tax, which is final tax, is only 15%. If the bond is more than 10 years, is 10 years and above, the withholding tax is only 10%. But we also have the other classes of bonds, like what we call the infrastructure bonds, that are tax-free, meaning that you do not pay any tax on this particular asset. So if, for example, you want to buy government bonds at the moment, the infrastructure bonds, they do not bring or attract any tax, meaning that all the interest that you earn belongs to you or comes to you. So when you look at these classes of assets, you find that you are able to pay less tax but still be within the law. There's another thing that probably many people never get to that level of tax engagement. If, for example, you look at most of the rich people, many of the rich people, the houses they live in, the cars they drive, even utilities, electricity in their homes, things like water, and even servants, the domestic servants they employ. There's a way you can arrange your income in a way that those become tax allowable. For example, you find rich people, they create a company that now lends them the house they live in. So you find they are paying themselves rent, but through a company that they have created, or a company that is associated with them. In that way, they are able to claim the amount of money they are spending on the house, even when the house belongs to them. That company is able to claim directors' fees, like directors' allowances, like housing. They can pay utilities, water. They can pay electricity, domestic workers. So you find that these people, they are able to organize these particular expenditures in a way through a company that they are able to claim that money back as a tax deductible. And in the process, they are able to reduce the amount of tax they are paying to the government. Unfortunately, for many of the middle class people and the poor, the houses they live in, the water bills they pay, the electricity they pay, their domestic workers, they have no way of claiming that back as a tax allowable. But those people who have a bit of wealth and they're able to put these expenses in a particular company, then you find them, they don't own houses, when in theory, in actual sense, they might own the house, but in theory, the house is owned by the company, and the company is able to help them claim those tax allowables. So when you talk about taxation, one thing that you need to invest in a lot is to understand the tax laws. I know many of us never spent time to try to understand the tax laws. Many of us never try to understand how they pay taxes and the kind of taxes they are paid. When they are told this is VAT, they simply pay. If they are told this is payee, you can't do anything, they simply pay. When they are told this tax and this tax, one of the greatest things that you can make and help yourself is actually to invest in understanding tax laws. And if you have a lot of money and wealth, it actually makes a lot of sense to even hire an expert, a tax consultant, to be able to pay or to help you to organize your incomes in a way that you're able to pay less taxes. So if you are really in the game of money and wealth, one thing that you cannot avoid is to invest in tax education, to invest in understanding taxes and how they affect your money and wealth. Because as your money grows, tax become a major consumption or a major expenditure, and you do not want to earn all your wealth or create a lot of wealth and then pay it to the government. So investment in tax education is extremely critical, and if you really cannot do it yourself, you might need to get a consultant. But even if you get a consultant, you need to understand the language of taxes. So this is what I call unnecessary evil that you must invest in. So I would really encourage you to get interest to understand taxes and how they affect different incomes. Thank you, and see you in the next video.